Hello everyone, welcome to a new video for Bitcoin price prediction based on Elliott wave analysis. Starting on the daily chart here to explain the bullish scenario, of course, that we have. Basically, that we might still have, of course, a bullish scenario always on this channel and bearish scenario at the same time. You make the decision, guys. No financial advice. So we have 1, 2, 3, 4, and a 5 and not finished yet. We have a wave 5 with a triple 1, 2, 3, 4, 5, 4, and a 5. You're looking for one more wave 4 here in the yellow, and you're looking for a wave 5 toward the upside. The problem with this wave 5, it has passed the 5 times of your wave 2, taken from the 1, 2, 3, 4, and a 5. The invalidation of this bullish scenario is taking the 65k, and that means, of course, we still have a potential of ABC taking this invalidation very easily for a bear market, continuation for a big wave B, and then again one more wave C toward the downside, hitting, of course, almost this area, which is a stronghold area, and then moving toward the upside. Why I am bearish? Because, of course, we did not finish yet the time required for a bear market in a wave 2, and that means, of course, A, B, and a C, of course, to hit at least the wave 2 box, and at least to hit the minimum requirement for a wave 2 in a bull run, where you would like to see at least the minimum requirement 52k for a wave 2 hitting and then moving toward the upside. Don't forget, Bitcoin is a very, of course, bullish coin, which it can even start the bull run before even hitting the 0.38 on the logarithmic chart. So basically, you would like to see, of course, this scenario unfolding before moving toward the upside. Now, I saw some scenarios which are a little bit Moonboy scenarios / Elliott wave technique, but not logic. Basically, we have 1, 2, 3, 4, and they speak about an extended wave 5, looking at a 1, 2, 3, 4, and a 5. Maybe some of you already saw this scenario on somewhere on some channels, so I just would like to clarify, it is not possible or likely to have a wave 1, 2 for a wave 5 bigger than your major wave 1, 2 of this impulse. This is the first guideline, of course, for an extended wave 5. In case you are in extended wave 5, you would like to see the following: 1, 2, 3, 4, 1, 2, 1, 2, 1, 2, wave 3 hitting the 2.618 as fib level, 4, 5, 4, 5, 4, 5. This would be, of course, an extended wave 5. This cannot be, of course, a wave 1, 2 of an extended wave 5. And, of course, trade safe, guys. It's just that sometimes we have to keep fighting misleading scenarios as well in public. So yeah, that's why I'm clarifying. Your bullish scenario can be, of course, taking the all-time high with only wave 5 in the yellow scenario that you have here. 1, 2, 3, 4, 5. / no moon boys here. Let's move for the bearish scenario. For the bearish scenario, we have a 1, 2, 3, 4, and a 5. Finish, of course, wave 1 here as an impulse, and we're looking at these corrective waves that we were talking about, A, B, and a C. Your wave A potentially is not finished yet. You're still looking for a wave C after an A. You're looking right now for a zigzag, potentially wave B. It can be extended, of course. It can take the all-time high, telling everyone, oh, we're moving to the moon, right? And everyone is buying over there because we're heading to the 200k psychologically. And then boom, moving in an expanding flat wave C. A, B, and a C for a wave A, having kind of a triangle after such a crazy scenario, and then moving for a wave C again for the 0.38 before we start a new bull run. So these are the real psychology of trading, guys, in Elliott wave. So let's move, of course, inside this area to see what are the potential, of course, for the next price action for today. Now, basically, we have the following price action. Let's start with this scenario where we have, of course, an A, B, and a C. I would like to clarify first, it is a very, very hard to call this a 1, a 2, and then wave 3 here, and then wave 4 and a wave 5. Why? Because first, this is not an impulse for a wave 1. If you take a look as well, and I'm speaking here about the same scenario that I saw, of course, they were considering this a 1, 2, 3, 4, and a 5, and here where it started the mistake as well, where you have a 1, 2, 3 taking the high. What is your wave 5? 4 and a 5, not reaching the high. There is no impulse for wave 1. Therefore, higher possibility here that you are, of course, in a wave 1, 2, 3, 4, 5 as a leading diagonal wave A. Why wave A? Because once you finish in the top as higher possibility as leading diagonal, wave 2 is not allowed to be a triangle based on Elliott wave. Therefore, of course, this giving you a scenario only a wave B, and that transforms the whole scenario here as a wave A, B, and a C to the upside. You are looking currently to a wave C, of course, potentially not finished yet, and still looking, of course, for a wave 5 under the 1-to-1 fib level, which is the first step to start thinking about a bullish scenario, only if it is broken and overshooted, of course. Basically, you have a 1-2 here. You have a finished wave 3, potentially as 1-2, 1-2, 3, 4, 5, 4, and a 5. You have an A, B, and a C here. Your wave 3 is finished there. You have an A, B, and a C, which it would like preferably to hit, of course, the 1-to-1 fib level as a zigzag A, B, and a C. And hitting in confluence the 0.38 fib level as explained yesterday. This is a scenario from yesterday, by the way. Still unfolding, and of course, therefore, looking for wave 5 around the 96,500. And of course, to be watched in case we move impulsively or we continue overshooting, of course, this fib level. However, looking at this impulse that it has finished the wave 3 under the 1-to-1 fib level, meaning that the wave 5 is gonna be exactly finished at the 1-to-1 fib level. And that, of course, gives higher possibility again that you are in an A, B, and a C corrective wave, and you're gonna continue, of course, the trend towards the downside. That was it for Bitcoin. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye bye.